Mike, good morning, everyone. Good morning. I wasn't going to do trading with Sergio since the markets are closed today due to Martin Luther King Day, but I got nothing else to do. I finished what I'm supposed to do. Kids are home from college and high school. I thought I'll do something different today. It'll be an AMA session. Ask me anything session. How about that? How about that? We'll do that. Ask me anything. And if any of you would like to come on, wide open topic today. Whatever you guys want to discuss, we'll discuss. Preferably finance, but or trading, or stocks, or markets, or tariffs. We know it's going to be a pretty rough opening for tomorrow, and we'll see if the dip is bought, just like a million other times. The other thing I want to do today is I want to go through my X feed and read out loud without reading the original posters' names, obviously, but see what kind of shenanigans are going on there. So, futures are deep red, as the title of today's live stream indicates. Let's take a look. Gold is up 2%, silver is up close to 7%. They're just ripping higher. And I posted my positions already on Friday in the community page of the YouTube channel. Please go check them out. At the moment, it looks like futures are deep red, about 1% on about 1% on S&P 500, about 1.12% on Nasdaq. Yeah, it'll be a rough opening. I mean, President Trump was hinting about Greenland, and then he threw in the tariffs after the markets closed. 10% tariffs. Or is it 25%? I mean, I lose contact with these things now. It's just numbers are flying all over the place. Back to tariff musical chairs in April. I don't think it's going to be that rough. It should have been priced in the markets, to be perfectly honest, but I guess it wasn't. And then we'll see what kind of opening we have. I have some protection on the downside with put debit spreads on the SPY, 690, 680. We'll probably open about 685, so they'll be in the money. The long side will be in the money, so it'll recoup, but I'm also long a bunch of stuff. And yeah, I'm also long BMNU. Let's see what kind of bleeding we get out of that. Luckily, I have covered calls on it. You know, cost basis being so low, it's pretty, I mean, I don't think it's going to matter that much, really. But yeah, market's not taking it well, this latest round of tariff musical chairs. The other thing is, I think there's some rumblings about the Supreme Court coming out with some sort of decision on the tariffs. We'll see. We'll see what happens. Good morning, Mike. Are we live? Yes, we are live, sir. Good morning, David. Good morning, Meta. How you doing? Good question. What's your thoughts on cover call ETFs, especially the weekly paying ones? Yeah, okay. There's academic studies done on structured products. We call those structured products. They basically try to create income there are many. There's close to, I think, $1.5 trillion of those structured products out. They make great money for the bankers and everybody else involved. Depending on your age, I would not touch it because I can do that. I can get returns that are much higher than the benchmark. But if you have a job that you cannot be focused on trading or investing yourself, yeah, I have a point. But there's also academic studies done, many. You can go to YouTube. There's a couple of really good videos about it with facts that they underperform severely because the cost of operating these is very, very high. But there's many, and I think the better way would be just go dollar cost average into an index fund. And if you're proficient enough, maybe you can write your own calls. But if you don't have the time and the knowledge to do it, yeah, they have a space because they have grown immensely over the last probably 15 years or so. And structured products underperform on the way up, and structured products underperform on the way down. The reason is cover calls do not give you protection. Okay, like for a day like tomorrow, let's say we open 1% lower. The stocks that they own and they write cover calls on, the cover call premium that you take in is going to be minuscule compared to what the stock can experience as far as a drawdown is concerned. For example, during the April crisis, when the indexes dropped 20 to 25%, many stocks got smashed by a lot more than that. And the stocks that they have in these structured products, they may have, let's say, hood, okay? So let's see where you would be in hood, and then I have my account up so I can show some charts. Um, where would you be in hood if you wrote cover calls? Okay, simple. Oh, the stock's high is 155. It closed at 108. Probably open at 105 tomorrow, getting closer to some support range. But let's figure that out. Let's say structured product portfolio owns hood, and they write calls on it. Stock's 155. Let's say they sold the 155 call for $5, $6, $7, which comes to about 3% for this cycle. I don't know if they do weeklies. I'm sure there are some that do weeklies as well. The other thing with the structured products is that everybody's selling options these days, right? So when implied volatility is low, it's not time to sell options. I mean, we have experienced a very low implied volatility or VIX numbers over the past, I don't know, decade. And when VIX is down to 13, 14, 15, you're right, cover calls, your premiums you're getting are not going to be there. And these structured products don't time, right? They just sell. And so if you had done that in April, for example, on hood, and when hood dropped from, I think it was 75 down to 28, the cover call you sold is not going to protect you on the downside. That's why all the studies that come out prove that structured products will not give you the upside at all, because after that, what did hood do? Hood ripped from 30 or 28 to 155. Well, if they had cover calls on hood, they got called away, and you left a 3x or 4x on the table. I'm sure they keep buying it and selling, rolling, doing all that stuff, but they underperform on the way up, they underperform on the way down. So that's my opinion. 10% to start and 25% as a hammer. Are you talking about the index, and is that your guess for what's going to happen with this Greenland tariff thing to Norway? And I don't think Norway and Denmark care that much because they have massive amounts of oil, obviously. And European tariff things. I mean, there's talk about why he's doing with Europe. I think he's doing this with Europe to bring Europe to its knees, because economically Europe is not doing as well as the US, obviously, and then for them to be dependent on the US as opposed to China and cut ties with China. There's a lot of political stuff going on in the background that we're not aware of, I'm pretty sure. But market being down as much as it is 1%, I mean, what's 1%? It's nothing. So is that what you're saying? It's going to be 10% to start? So tomorrow is the start of the 10% and go down 25%? But possibly it could. It could. It definitely could. Good morning, Manny P. Thanks, I appreciate it. I just wish this video a few seconds until I continue. Oh, okay, cool. Yeah, I learned a lot. I don't know what that means. But so, for example, let's just stick with the ETFs. And, specific examples, obviously, of these structured products. Let's take a look at Hood. So, yeah, this was the April swoon. Okay, so Hood goes from 66 down to about 28 during that mini crash, let's say, and then it rips from 28 to 154. If you had a structured product, you're going to get called away and buy the stock higher, get called away. Now the protection is mute, really. There is no protection. So stock is pretty much in a downtrend. And did I freeze? Stink or swim freeze? I'm not sure. Okay. No, we don't care about that. Okay, we're back. So 154 dips down to 102. No cover calls is going to save you during this 50%, almost 50% or $50 pullback. Even if you keep rolling them down, you're going to be behind. So a lot of people on X, which I'll read some feeds, some of these fools that will post like, oh, I saw cover calls. Yeah, you saw cover calls, took in $3, stock is down $10. Okay, yes, you're collecting unrealized losses basically for realized gains on your cover calls. That's what you're doing. You're just accumulating unrealized losses. Because to have a cover call, you have to own the underlying. If the underlying is going down $50 in a month or so, right here, what cover call is going to give you any protection? Especially even if you did weeklies, okay, they all expire worthless. Collectively, you may have collected $10 out of it. And now what? You're down $40 to $50 on the stock. We're down 50 on a gross basis, $40 on a net basis. You're going to say, well, I'm going to hold it forever. Okay, fine. What if it goes down to 50? Is there a guarantee it's not going to 50? I have no idea. So, in my opinion, cover calls are a disaster. And you will miss all this upside. You will miss the move from 30 to 153 in about 5 months, right? You might cover calls. Okay, so let's say you bought the stock on the low. You bought it at 30. You sold at 40 cover call. That's 33%. Well, stock was already at 48 like 10 days later. And now you're going to do what? Now what? You're going to watch it go to 150. Same thing happened on Palantir to many thousands of people who went and bought puts, sold puts, got assigned, and then sold cover calls. And there's Palantir. I mean, to me, it's like, if you do believe in a stock, and if you have done your due diligence, why go sell cover calls? Why cap your upside? I would be more inclined to sell puts when the stock's going up, because they're going to keep expiring worthless. Selling puts is also, I mean, to me, it's like, if you bought a stock, you want the max out of it. You want the most out of it, especially if you're convinced that a Palantir is going to do what it's going to do. Yeah, a lot of people bought and held, I'm pretty sure, and they wouldn't touch cover calls, because otherwise you're going to cap your upside. So to me, it's like, it's a farce. Alrighty, let's look at this. Yeah. Oh, okay. Yeah, that's correct. I agree. Yeah. In fact, there is a letter circulating on X today that was authenticated that Trump wrote it to the president of Norway, and he was like saying, I'll read it. Actually, it's on X. You guys can also go follow me on X. It's in the show notes. He was saying that the reason he's doing that, he's not interested in peace anymore because he didn't get the Nobel Peace Prize, because he stopped 8 wars. I don't know. I don't think there were 8 wars, but look, all this stuff is, the right, the left. It does affect markets for sure, right? And we'll see where this musical chair ends. I mean, I call them musical chairs now. It's like, I think the bigger drop, if there is going to be one, in the markets is going to be after the Supreme Court decision comes out regarding tariffs from April. Because supposedly we're taking in tons of money from these tariffs, and then if it's found to be illegal, let's say, we may have to return all that money, and we don't have that kind of money since we're running 38 trillion to be 39 trillion in about a couple more weeks. National debt. If you were in a position where you had a big SPY position, okay, accumulated from over the past decade, okay, no. So you answered your question here, right? So good question though. If you were in a position where you had a big SPY position, can still hold for decades, more to come, okay, accumulated from over the past decade with massive capital gains, okay, wonderful. Would you put it? Why would you? If you had done that 3 years ago, 4 years ago, 5 years ago, that collar would be gone, right? You'd be way above it. So, no. I mean, you have to believe in the power of compounding. You have to believe in the rule of 72. You have to believe in dollar cost averaging. If you're a passive investor, no, I wouldn't. If you want to protect yourself against a drop, but you're saying it here that can still hold for decades more to come. Yes, there are drops. In fact, I said this with TJ when he was on Friday. If you had bought every single top tick in 2000, before the dot-com crash, when I was on the desk in 2000, then in 2008, GFC, top tick, we're talking, okay? In fact, we can go look at that. Let's take a look at that. Let's take a look at that. Let me get rid of this. That would have been interesting, actually, study to do. So let's take a look at it. So this is the SPY. Okay, let's go back 10 years. No, actually, let's go back max. Max meaning we're going back to 2000 right here. Okay, top tick in 2000. Top tick in 2000 in SPY was 159. These are real numbers. This chart goes back to 1993. Okay, 159. Then we dropped all the way down to 77, down about 50%, 40%, right? So let's say we bought the top tick at 159, and then we bought the top tick again before the GFC, which was again 159, ironically. And then we bought the top tick at 341 before the pandemic. And then we bought the top tick at 481 before the Fed decided inflation is running hot because we pumped in 7 trillion into the money supply. Let's raise rates. That was the fastest they have ever raised rates. Okay, it goes from 481 down to 346. That's about 30%. And if you bought the top tick before April crash, the tariffs musical chairs, and that was very quick, right? So there was one in between Japanese yen carry trade crisis, but let's not even count that. 612, and during the tariff musical chairs, we dropped to 480. Today we're at 696. If you bought the top tick every single time, and we're talking decades now, and then like you're saying, and you're going to hold it for decades, yeah, there may be a correction to 600, 550, whatever. But then ultimately it'll resolve itself. On long periods of time, stocks go up. And there are reasons for that, obviously. Obviously, earnings, mother's milk of every corporation, and the S&P 500 earnings are supposed to be at a record high in 2026. So, yeah. So hopefully that answers this question. No collar. Now you're timing the market. By doing what you did yourself the biggest favor. Why cap yourself? I'm not sure. Would you take a massive tax hit to sell in anticipation of the reset to capitalize on other opportunities? Now, that's a different story altogether. For example, how would you have done during the same period if you owned NVIDIA or Palantir or SoFi or Hood or some of these other stocks, right? They weren't even around then, probably, other than NVIDIA, or some of the Macs haven't. They have done better. But SPY, no, I wouldn't do anything. Massive tax hit to silent anticipation, no. Other opportunities? No, now you're becoming a trader from an investor, from a long-term investor. So now you're trying to time the market. Here's something that my mentors told me 30 years ago. Time spent in the markets beats timing the market every time. There are some people who can do it. I tried to do it successfully, and I've done it for long periods of time. But then I don't mess with my investment account. That's one thing. Yeah, if you want to take advantage of some other opportunities, Mosquito 5641, go open a different account, put some money in there, and trade. I mean, I wouldn't do any of that stuff because now you're trying to time the market. Like I said, look at Warren Buffett. Warren Buffett earns his hundreds of billions after the age of 60 because of the power of compounding. Hopefully, you're reinvesting your dividends over those decade and going forward and get your 10, 11, 12% per annum. Even like I showed you, I mean, even if you bought the top tick, where would you be? You would have tripled, quadrupled your money. So, no, I wouldn't do any of that stuff. Or keep executing my position with a calorie use margin for other opportunities. Yeah, I just said, just go open a different account, trading account, and do whatever you want to do. I mean, I call it business and pleasure, right? Business is investing, long-term growth, long-term wealth creation and preservation. And trading is something that you go for to get 2, 3, 4x of the benchmark. It's not as easy as some of these fools on X make it out to be, but yeah, definitely. I'm not against that at all. Have a trading account, have a separate investment account. I wouldn't do that, but again, it's your money. What's good teacher, Sergio? Not much. Buddha, what's up? How you doing? What's up, Mr. Partner? Devastating. They fired their coach too now, Buffalo, after 9 seasons. See, Josh Allen crying, a grown man crying in a news conference is very deep. This guy makes, I don't know, 30 million, 50 million, whatever, a year. He was crying for his performance, which I thought was fantastic, with the exception of a couple of plays, obviously. We're talking Buffalo now because me and Chris are Buffalo fans. Well, he made me a Buffalo fan. But goes how intense these things could be, right? Emotionally and physically, obviously. And yes, they make the money, but what's the other side? And yeah, maybe next year, Chris. Maybe next year. Yeah, I have one. Forget the ads. Robinhood Gold is going to give you 3.25 or 3.5 APY on your cash that's sitting. Unlike a bank that's going to give you, if it's in a savings account or checking account, you're going to get 0.01% versus 3.5%. It's not going to keep pace with inflation, but if you have money sitting idle, definitely. There's many. It doesn't have to be Robinhood. Any money market fund will do that. Will give you that. Any brokerage that allows sweep, auto sweep will give you that. Robinhood Gold comes with a subscription fee. I think it's $5 a month if you pay monthly, or $60 or $50 a year if you pay for the first 12 months. But so think of, do your numbers, Buddha, right? So if you put in 10 grand in there, okay, so what are you going to get? If you put 10 grand in the bank versus 10 grand at Robinhood, which is protected, okay, so $500 you're going to get. You're going to pay $50 to Robinhood. still decent, right? At 3.5% and 10 grand, you're going to get $350, so 303%. Look, 3% is not going to give you any protection to debasing of the currency and US dollar losing its buying power, because it's doing it at 6-7%. You're still going to be at a deficit, but it's better than nothing, better than putting your money in a checking account like a lot of people do, or savings account, which is like ridiculous, right? But people don't know. And what you don't know is not your fault. The problem is nobody teaches you that stuff at the simplest level, just this level right here. Why don't they? Well, they want to make you a dependent society. They want to give you credit cards. They want you to carry balances and pay 35% interest, unfortunately. Okay. All right. Were you born in 2008? You were. Could you have invested? Could your parents have invested for you? $10 a week, $10 a month, $50 a month? Where would you be? I know you're young. You're wasting your life. You're wasting your time, not investing, not gambling, investing. You should be. You're only 20-something. You just got to invest, my man. Put $100 a week, $100 a month into some account and dollar cost average. Don't even look at it. No trading, none of that bullshit. Just invest. Dollar cost average into S&P 500 or triple Q. At 65, you'll have $1 million. Now you're going to say, in 40 years, 30 years, $1 million is not worth anything. I agree. Would you rather have it than not have it, though? Because time flies. I'm 58. Time flies, my man. There you go. You answered your question. So I've put my Uber money into good. A lot of people are doing that. I ran an example. Matt from Boston does that successfully, and my hat's off to him. In fact, I interviewed a young lady from Pittsburgh on this channel, Lindsay. Hats off to Lindsay. Go check it out. She's very active on X as well. She drives Uber part-time, makes $40, $50, $80, $100. In fact, I taught her some tricks, and she's doubling her income because she used to be one of the ones that accepts every offer. I said, no. Let's just decline and recline, right? And cherry pick. And she's doubled her income. And she literally, immediately, as soon as her shift is over, takes the cash out, stacks into Bitcoin. I think it's an amazing idea. And a lot of drivers should start doing that. Just do one extra trip at the end of the shift, $5, $10, $20, whatever it is. Don't touch that money. Directly goes into Robinhood, dollar cost average into an index. You'll be so much better off. It's not even funny. It's not even funny, you know? Time has nothing to do with it. It's knowledge. Time has nothing to do with what you're saying. Now, they may not have had time to take you to soccer practice or baseball practice or football practice, but they did not have the knowledge. It's not the time. It takes literally 10 seconds to do that. That's because they're not taught. It's not their fault. Nobody does it. Even today, I mean, look, this is a very important issue to me, financial literacy, which I'm going to try to change, starting with the gig workers, because we'll have some massive meetings coming up with a bunch of companies and independent contractor work, right? Great, yeah. They don't understand budgeting. They don't understand taxes. They don't understand savings. They don't understand investing. And it's on purpose that they don't teach you that, right? What they teach you in elementary school or middle school, they teach you about gender differences and sex and this and that. Nobody talks to you. Used to be an econ class in high schools and elementary schools or middle schools. It got replaced with that. I mean, I'm all for that too, but why? Why don't they teach that at middle school? You know? Yeah, I know checkbooks have gone away. Nobody has a checkbook anymore, whatever. It's all electronic. But then budgeting, investing, none of that is taught today. And that's why we have millions of college graduates with hundreds of billions of dollars of student loans that they're going to struggle to pay for forever. Why should you come out of college with $200,000-$300,000 student loans that you're going to pay 8% interest on forever? And you can't even get a job these days if you graduated from college, by the way. Go look at Fred, Federal Reserve Economic Data. The highest unemployment rate, in what cohort is that in? recent college graduates. They can't even get a job, but they have $250,000 in student loans they accumulated. Because the subject you studied is not going to pay you that anyway. You can't even get a minimum wage job now. So it's not about time, Buddha. It's about knowledge, and unfortunately, we don't teach it. But I'm going to do my best to improve financial literacy. So shameless plug, go to my website, www.sergioavadian.com. In fact, you're in time to get today's newsletter. Every Monday at 12 Pacific, we send out a wonderful newsletter, short. You learn a lot, you know. I'm very passionate about this, that we need to improve financial literacy in this country, because the wealth gap in this country is as wide as it's ever been. 10% of top 10% owns 87% of the assets in this country. Bottom 50% owns 1% of the assets in this country. Figure it out. Can you get into that top 10%? Sure you can. You don't have to be an engineer at Google making 10 million a year. At your level, you can. But you have to start. And a lot of people go like, oh, it's too complicated, I don't understand it. Well, go to the website, start reading, start educating yourself. I'm going to do my best to do it, because I'm a capitalist, so I don't support socialism or anything else. But you are in charge. You are in charge of your own financial future. Your parents are not going to save you. Government's definitely not going to save you. Banks are not going to save you. All they're going to do is suck your blood dry. Okay, cool. All right. Have credit cards. I have tons of credit cards. Do I carry balances? Zero. Okay. So float their money for 30 days. They float your money. When you deposit a check at the bank, they go like, we can't give you immediate credit. We have to put a hold on it. What do you think they're doing that? Multiply that by hundreds of millions or billions of dollars that they float for 3, 4, 5 days and earning interest themselves. Right? Do the same thing to the banks. They give you 30 days. If you have a credit card, you buy something, you don't have to pay back in 30 days, but make sure you pay it fully and don't carry balances. Because that's when the cycle starts, and then that's when you eat it. That's when they take your money. Okay. Good morning, John. What's going on? How's it going? Good question. Let me see. No, I have a CPA who does all my stuff. He's retiring, so I'm looking for one, if you do know one. But I think for a rideshare driver, I don't think it's that complicated, man. I'm pretty sure you're going to take the standard, I think 72 or 74 cents this year mileage deduction. I think you can do that on TurboTax or whatever. I don't think it's that complicated. Just upload your 1099-B, 1099 NEC, and then take the mileage deduction. Hopefully you have a mileage tracker or somewhere approximately. You should not be owing any taxes, honestly. I don't think any rideshare driver owes any taxes or should owe any taxes. Yeah, exactly. Exactly. It's on purpose, Buddha. It's absolutely on purpose. It's on purpose. Yep, they didn't. They don't. I have a kid in high school. I have a kid in college. They don't teach it. It's on purpose. I'm not a conspiracy theory guy, but it makes sense to you, right? If you're a bank, my daughter's in college, about to graduate, undergrad, and going to med school. Okay. They offer their credit cards the second she turned 18. I'm like, okay, do you understand what this is, honey? No. Okay, let me sit down and let me teach you this. But now she understands fully how to use credit, how to use the bank's money. Don't carry balances, number one. Take all the credit cards they give you, establish good credit. You're set for life. Don't fuck around. Don't FAFO. Don't miss payments. Don't do this BNPL stuff. Buy now, pay later. That's deadly, especially if you miss a payment. But that's my opinion. Is it's wonderful. Credit is like the oil of the engine. But then if you put too much oil in the engine, what happens to the engine? It blows up. Or if you put not enough oil in the engine, it blows up. So you have to have this perfect balance to keep it going. And I love credit. I'm not a Dave Ramsey type to go like every credit is bad. No, absolutely not. I disagree. 100% disagree. Absolutely. 100% correct. 100% correct. That brings the bigger question: is college worth it? these days. I don't think so. My day definitely was worth it. You know, there is a statistic that every college graduate earns 3x to 4x of a non-college graduate's income. It's the other way around now. I guarantee it, any plumber, electrician, air conditioning contractor, roofer will run circles around a college graduate these days. Especially if you went and studied some ridiculous topic and are 200,000 in debt now. But it's marketing. That's marketing too. People market. You must go to college. I'm like, no, we don't have to go to college. Go to trade school. Today, I'm talking today, 20 years ago, 25 years ago, when I went to college, completely different story. But this is a trap right there. It's a trap. It's a trap. Yeah, it's all marketing. K-shaped economy. Yeah, seems like it. What do you mean? You haven't done it yet? Bro, go sign up. Go sign all your friends up. Buddha, I'm telling you, I have no gain out of that. I just want to improve financial literacy in this country. And it starts with younger people like you. There's 12, 15 already beautiful, amazing articles on the blog. And it's free. Free newsletter. Free education, my man. I don't know what else I can tell you. I'm surprised you haven't done it yet. Yeah, I appreciate you being here, but yeah, I mean, I think I have a good video coming out about this today because a lot of people are cursing Tom Lee and this and that. And, you know, I'm not a huge fan of playing the victim. I'm too old for that, you know, but in this today's society, everybody blames somebody else instead of looking to themselves in the mirror saying, like, what did I do that for? Take some responsibility, man, especially if you're investing your hard-earned dollars or trading or whatever you're doing. It's really difficult to understand all this stuff. And if you don't understand it, don't touch it. And again, if it's too good to be true, it's probably true. So, but I've been saying this for months now. I started this channel like a year ago, and I've been saying it for months. I go, buyer beware, understand what you're getting into. I mean, it's not that hard, really. Well, maybe, I don't know, maybe it is hard. But, you know, information, education is power. If you were correctly informed and educated regarding that topic, you wouldn't be in trouble. I mean, I'm not in trouble, but I'm just trying to, you know, my goal in this channel is to have others avoid the pitfalls of investing, trading, and all that stuff, because I've seen it all. I've done the mistakes. It's like me talking to my 15, 60-year-old high school son, right? You know, I've been on this planet a lot longer than him. So when I do sit down, I want him to take what I say seriously, because I don't want him to make the same mistakes I did, which I know are detrimental to me. Where? And now he's at that stage that, oh, I'm a strapping young man, I'm a soccer superstar, I got chicks, this, that. I'm like, bro, don't make a big mistake. You know, sit him down and talk and make him understand. Same thing goes with investing and trading. All these ex-gurus and, you know, gurus, whatever. I'm going to read some fucking laughable comments on there. Because there are these people with hundreds of thousands of followers on X, and they put some shit there, and some poor retail is going to read that and think it's like that's really it. There's no risk in any of this. It's just shooting fish in a barrel. And then they get stuck. And then they just go, what'd they do that for? And it's a big, big hit. I mean, I know what's going on. Yeah, you're welcome. Jesus Christ. Well, thanks for sharing that. But imagine how horribly you ran your finances. I mean, you're born in 97, you said, right? So at 24 years old, you went chapter 7. Who gave you that fucking advice anyway? Look how horribly you ran your finances to go bankrupt at the age of 25. Well, you got 3 more years. No, 6 more years to get all that shit cleaned up. Is it 10 years that the bankruptcy falls off? I don't know, bro. It's just a horrible situation. Why would you go bankrupt at the age of 24? What did you do? What kind of debt did you take on? I wish you had known me in 2021. I wouldn't have fucking let you do that. I don't know how to deal with credit. Yeah, well, start somewhere, my man. Your credit is shit. You want BK. Nobody's going to give you credit for 10 years anyway. But then, again, let's look at the positive side, okay? You want BK when you were in 2021. Okay, so it's 5 years already into it. What did you fix in those 5 years, though? Did you learn anything about credit, how to apply credit? Because in 10 years, that bankruptcy is going to fall off from your credit report. Now banks are going to go, okay, this guy's pretty clean. Let's start issuing some credit. Well, next time around, so in 2031, you're going to be only 35. Your whole life is ahead of you. Don't fuck it up. Don't fuck it up, bro. Don't. You'll learn a lot. Go look at the website. Yes, sir. I do. A lot in this knucklehead. Yeah, and I'm sharing it. I mean, I'm an East Coaster trapped in the West Coast. I don't sugarcoat things. I call it the way I see it. You like it, you like it. You don't like it, tough shit. But I have experience to do. I'm sharing these experiences because you cannot buy or teach experience. You can learn everything in the books. You can learn about trading, investing, read websites, subscribe to people, and whatever. To apply it is something else. To have done it is something else, right? That comes with experience, years of experience. That comes with all the pitfalls of investing and trading that I've seen over the last 30 years. And I just want to share it. What am I going to do with it? You know what I mean? It's free. So, and I like talking. So there you go. I got a credit score, had me a good job before Uber and got me a nice hybrid Honda and was paying good. Okay. Again, and again, you know? It's about somebody else's fault or this and that, and you know. Okay. It's not Uber's fault, my man. I disagree with that. I don't know about that, but I don't know your specific situation. I'm sure you had to help out your family or whatever, but well, the debt was taken by you, though. Nobody put a gun to your head and say, "Take on more debt." You just went into the spiral, the debt spiral, like everybody else does in this country. I mean, go to FRED, FRED, Federal Reserve Economic Data. It's a free government website. All the studies and analytics are there. I mean, look, somebody said K-shaped economy. I completely agree with that. If you don't know what that is, Gemini or Rocket. But if you look at the FRED website, credit card default rates are skyrocketing, especially subprime auto loan defaults are skyrocketing. This is not good for the economy. We're a spenders society. We need money to spend. And 75% of our gross domestic product, GDP, is consumer spending. If consumers start slowing down spending, we're in deep shit. Markets are too high, all that stuff. Yeah, but you took on the debt. You shouldn't have taken the debt. It's like, in Armenian, we have a saying, since I'm Armenian, if you fall into the ocean, you'll grab a snake just to keep you afloat. Well, that's what banks are. Banks have a place. I deal with banks. But they're there to look out for their own interests. They're there to make money. How do they make money? To let you borrow. And still one of the oldest professions in the business, other than being a, what. So, nobody put a gun to your head to do the debt, but you got into the spiral. Look, you're all going to be cleaned up at the age of 31. No, 30, 2097, 2031, 35. You have your whole life ahead of you. Start fixing it now. Don't do those bad habits. But then, unfortunately, a lot of people promise themselves they're going to clean up and they don't do it. because they don't have the proper guidance. And it's too easy. At 31, they'll give you more credit, and then hopefully you won't fuck it up this time. Thank you. I appreciate it. I appreciate the support. I would have definitely not gone into Chapter 7 for 80K in debt. What you should have done is you should have gotten 800,000 in debt and then go to Chapter 7 for 80K. Why fuck your credit up for 10 years for 80K? That comes to $8,000 a year, bro. I wouldn't have definitely not done that. Now, if you go to 8 million in debt and then fuck it and then keep the money, that's a different story. Look, I'm not telling you to do it. But for 80K going to Chapter 7 and fuck up your credit for 10 years is stupid. I do feel like how I'm doing, I will eventually fuck up so bad. Well, that's not a good attitude, my man. That's not a good attitude. Well, number one, surround yourself with some people who are not doing what you're contemplating on doing again. Surround yourself and fill your brain up with some proper information and education. I mean, look, I understand it's tough. It's like plastic crack, bro. Crack. Just plastic. I call it plastic crack. That's what it is. And then, but you need it to go ahead in life. Credit. If you don't have it, it's bad. If you have it, it's bad. But management of it is what the problem is at. If you don't have credit, it's bad. You can't go buy anything in this country. From a house to a car to a refrigerator to whatever. If you don't have it, it's bad. You can't do that either. But if you have it and manage it bad, that's bad. So I do understand the dilemma. But then we're not taught. Right? That's why Dave Ramsey is so huge now. He goes, I'm against every debt. I'm like, no, bullshit. I'm not against any debt. I have a mortgage. I have credit cards. But one thing is for sure that I would not buy anything that I cannot afford. And because I am not going to pay these banks 35% interest. Not a fucking chance. And it's very difficult, though. It's very difficult to do because incomes have not grown in this country as fast as your buying power has declined. So people do it. I do understand it. It's a dilemma. You want to improve your life, and also a lot of in today's society with social media, you see all these influencers and doing this, doing that. That's not who you should look up to. You should look up to me. Live a great life. Don't listen to these idiots on YouTube or whatever, or Instagram or Facebook or X or whatever. I mean, there is a way to do this successfully. Because those people, they come and they go. What they do is they instill bad habits in a lot of people that are watching them. Oh, I want to be like that guy. Really? You don't want to be like that guy at all. Yeah, you just don't want to do that at all. When you make selling profits, selling puts. No, I don't do any of that. When you make selling profits, how you actively? No, it's just one trading account. And then you get your 1099 at the end of the year. Was it 1099? Yeah, 1099. No, not 1099. W whatever. Yeah, it's 1099. Whatever the tax document is. I'm not a tax man, so I don't know. When you make selling profits, are you actively? Well, yeah, you have the profits, you have losses too, because a lot of people don't talk about losses when they sell puts. They only think it should expire worthless and they make money. No, not so. No. I don't need to keep track, but the brokerage keeps track of it for you. I mean, if you're with decent broker, Robinhood does it, Schwab does it, Ameritrade does it, which is Schwab now, TD Ameritrade or Interactive Brokers, they all send you a tax document. You just hand that to your CPA. Because all the gains, all the losses are in there. Unless there's some wash, situations where you have to be careful about. But no, I don't do any of that. I'll just keep it in the account. Now, what I do is I don't add money or during the year or take money out during the year. I start with a fixed amount, and then let's see what happens at the end of the year. Like last year, I took a big chunk of it out to pay the taxes. So I had a decent year, and then start again. Start the clock again. That's it. I don't need to honestly keep track of anything. A lot of people do spreadsheets and this and that. I'm like, no, brokerage is doing it. The other thing is, look at your account equity. It's all reflected in there. Every transaction, every second of the day is marked to market and reflected in your account equity. If you had 100,000 account, it goes down to 50,000. You know, you lost $50,000. Now it could be realized gain or unrealized gains, or losses. And then if you have gains, you just take that against it, because selling puts, unless you're doing leaps going out over a year, so everything is short-term capital gains and short-term capital losses. If you have short-term capital gains, you have to pay taxes on it. If you have only gains, which most people say, oh, I only make money, I'm like, okay, cool. And then you take off your short-term capital losses from short-term capital gains and pay your taxes. Unless you have other things that you can do. You can run it through LLC, your trading account, or a sub-S, or have more, that then gets more involved into taxes, tax law. So I'm not going to give advice on that. Do I think the Fed should lower rates? No. No. But they are, because the Fed and the White House is going to be one, probably around May. Look, every asset class is just flying. Stocks all-time high. Real estate, gold, silver. Crypto is having a little trouble here. Why do we need lower interest rates? In fact, since the Fed lowered the Fed funds rate last September, the 10-year, 20-year, and 30-year bond in the U.S. rates are higher. They cannot do anything about interest rates in this country. They can do it on the short end of the curve. On the long end of the curve, where all these mortgages and the car loans and things like that are based on, they cannot do anything about it. Are mortgage rates lower in this country than they were when the Fed started cutting rates? Fed has cut the rates close to 150 basis points now since last September. Has the 10-year declined by 150 basis points? No, in fact, it has higher today than it was last September. You can look at, actually, we can go look at that. There's the proof of it. Let's take a look. Prove my point. See, when I say shit, I'm bullshit. Here it is. This is TLT. TLT is the inverse. Inverse is going back to 2002. So if TLT is going up, that means interest rates are going down. So look at it that way, inverse. Okay? It's an iShares 20+ year Treasury bond ETF. This is where the rates are today. Well, let me go back to the last year. Not this one. Let's go back 3 years. Okay? So TLT going down means actual interest rates are going up. Okay? Let's go back to 1 year. Let's look at what happened since last September. This is September right here. No, that's March. This is September right here. September of last year. This is when the Fed cut the rates first. TLT was 91. Fed has cut the rates 150 basis points. TLT is at 87. So the 20-year bond is higher today than it was in September. So Fed cutting the rates now, and all asset classes are all-time highs, super duper inflationary, and we're going to pay the price for it. How? The bond market is going to say, F you all, 39 trillion in debt. We don't need lower interest rates. We're going to raise the rates. And then the government cannot control the long end. They can control the short end, but not much business is done on the short end. Okay? Like if you're a corporate giant, you can get the best rates, but if you're an average Joe trying to buy a house, how impossible that is these days, on a 30-year mortgage, those mortgage rates are the same or higher than they were last September. So, long end is what matters, and long end cannot be controlled by the government. It's so big that it will run its own course. Look what's happening in Japan, right? Go check out the JGB rates in Japan, skyrocketing. That's because of broken fiscal policy and broken monetary policy. You know what I'm saying? I answered that one. I answered that one. I want to move to a place on my own. I can't go where I feel like I'm screwed. My ADHD will eventually myself. No, you're making too many excuses, my man. You got to take the bull by the horns. Don't be the typical. I think you're Gen Z, right? Not even. Maybe. No, maybe millennial. Every millennial thinks like you. It's everybody else's fault. Not all that stuff is just fixable. I know it's easy for me to say sitting here, but so what do you recommend to make a little daily income stuff? This is nothing. That's the wrong question, my man. Nothing. There's no such thing. You want to day trade? Go join the 90% losers bracket. See, this is the thought that it's not your fault, David. I'm not telling you it's your fault. All I'm saying is that there is this. I'll go to my X feed and read some of these fucking idiots' comments. That's the problem. It's so easy day trading. Everybody's making fortunes. A little daily income in this now. If you're young enough, start investing long term. And then educate yourself. Read a whole bunch of books. Understand how the markets function. Understand the structure of the markets. And then put some money, get your car in the race. There's no such thing like that. A little daily income, no. You know, I mean, you can go follow some guru and will tell you it's so easy to day trade. Yes, I 100% agree. 100%. Well, it wasn't like that. We know that, right? We were a manufacturing society, and then we went off the gold standard during Nixon, and then the synthetic dollar started to get created. So since 1972, we've been just printing and spending. And that's good for assets. And that's why the top 10% owns 87% of the assets, because they accumulate assets, hard assets. It's been made easier for them to accumulate hard assets. Again, this is not a socialist propaganda or shit. I'm a capitalist, so, but they don't teach you that. They don't make you understand that you're losing buying power. The $100 bill that you look at today is nominally still says 100 on it. But is it worth $100? No, it's losing 6 or 7% of its buying power every year. And is your actual W-2 income going up 6 or 7% a year? No, the only thing you can do is buy assets, and then those will go up and they will give you the comfort. Gold, silver, stocks, right? Okay, that's what you have to do. Once you understand that game and then you apply the knowledge you're accumulating, then you'll be fine. But from the 70s all the way to now, the economy has shifted completely from being a manufacturing society to a spender society. They figured we create all these synthetic dollars, we pump it into the economy, and then we give everybody credit cards, and then everybody spends, and then we'll grow our GDP that way. Well, where are we now with that, right? Or trickle-down economics, that's failed completely, right? The rich get richer. Again, I'm a capitalist, okay? But then I'm a fair capitalist as opposed to a vulture capitalist. So, you know, the rich get richer, they accumulate assets, the poor cannot get. I mean, the divide in this country is as wide as ever, from politics all the way to economics. So, well, somebody has to care for the bottom 50%. And then they make you dependent to government services and things like that. Fuck that shit. F the government. Government's not going to give you shit, whoever's in the White House. They just want you to be a dependent person. Nothing. You know how big the mortgage market is? Trillions. Means nothing. Means nothing. That's what the Fed does that every day anyway. You know, don't listen to this bullshit, man. 200 billion in mortgages is nothing. It's like not even a drop in a bucket. You can buy all the mortgage-backed securities. That's what we did during all the crisis, right? What do we do? To push interest rates down, we print the money, we put it out there. The problem with that is, where is the 200 billion coming from? Which is still nothing. It's coming from where? They have to print money. Every time they print money, they put it into the system. Go look at the growth and the money supply in this country. You can do that. Grok, Google, Gemini, go look at it. Go look at the chart of the M2 growth in the US. There are times of flatness, and then they spike. When does it spike? It spiked during 2008 GFC. It spiked during the pandemic massively by 8 trillion. So every one of these black swan events that we have, we'll have to print more money, more. So next black swan event, which I'm pretty sure is going to happen at some point, I don't know when or what it will be. So perfect example of that would be during 2008 GFC, they created something called TARPs to save all the banks, Toxic Asset Repurchase Program. I was part of it, not personally, but long story short, I understood it completely. And then they put all the bad debts into JP Morgan's books and all the big banks. All the big banks got in a room. I go, I take Bank of America, you take Countrywide, you take Wachovia, you take this, you take that. I'm like, okay. That cost the taxpayer $800 billion to save the economy. The pandemic happened, 8 trillion. We had to pump 8 trillion into the economy, right? Now, because we're a spender society and people are not spending, they're sitting home, economy is about to collapse. 8 trillion. Next black swan event. What are we going to have to do? 80 trillion? That's why all asset classes keep going higher, because they create more money out of thin air, adding zeros, and they don't print dollars anymore. They just add zeros to the ledger, and then they just put it into the economy. Well, that money has to chase a return. Where is it going to go? Mostly into hard assets. Well, look at gold, look at silver, look at Bitcoin. I mean, if you look at Bitcoin this year, no good, but how about last 10 years? Or look at real estate. Everything is unaffordable. Try buy a house in California today with a starter house for $1 million. Like, no. So you have to understand the game. That's what the game is all about. Once you understand the game, you'll be fine. But you have to believe someone. Logically, my bias. Okay, logically and bias don't go together. There's no bias in logic. I'm not trying to be hard on you, bro. I know who you are, what you've done, but logic and bias don't go together. Anyway, logically, my bias is that because everything else is an all-time high and the crypto is not. There's no, you're just talking to your heart. You're not talking logic. Because everything else is an all-time high and crypto is not. What if crypto goes sideways for the next 3 years? Ultimately, long-term, I do believe what you're saying. Because that's why I dollar cost average. I bought more Bitcoin today. Every Monday, I buy the same dollar amount, regardless of what the price is at. I did that all 2025. I'm going to do it all 2026. Put it on my hard, wallet, cold wallet, and give it to my kids at some point. But I bought my first Bitcoin in 2020, and I didn't touch it for 5 years because I didn't think it was, it was like a speculation. Well, now that the price is here, it's become a reasonable part of my port. So I do that. I do believe long term. But you are not in a long-term asset. You are not holding ET. If you were holding ETH or if you're holding BTC, I go, okay, fine. I agree. You're holding some tool that cannot do anything by itself. Like you're not holding Facebook, you're not holding Apple, you're not holding Google. These are live companies with earnings. You're not holding anything that has the potential of earnings. Okay? It's not a company, these DATs, digital asset treasury, and make things worse. You own something that is going to depreciate over time. It's going to go to zero, which is BMNU. I think I'm correct in that. So, yeah, I mean, I don't know what else to say. I do agree with the long-term premise of crypto going higher, Ethereum and Bitcoin specifically. But when is that? Don't listen to Tom Lee. Don't listen to Michael Saylor. They're talking their book. If you were buying Ethereum and Bitcoin, I go, by all means, dollar cost average. The physical stuff, not the surrogates, not the proxies, BMNR, BMNU, MSTR, MSTU. I've been in all of SOLT and SBET, although SBET I think is probably the best one. Yeah, I mean, because you have to think of these things, man. You have to think of the downside. Upside is all yours. That's easy. That's the adrenaline rush. What's the downside? Is there a downside? And what's the potential of it? The negative potential, obviously. Yeah. Refinance demand, which is most sensitive to daily rate changes, search for. Yeah, because all the people that are stuck, but my mortgage is at 3.25%. My 30-year fixed. A lot of people who have done maybe adjustable rate mortgages, which is I had a mortgage company. I know the mortgage market really well. Maybe they're getting into fixed. Still high. I mean, look, actually, if you guys look at the historical mortgage rates, 5% is not that high. High. Talk about high. We were in 1978, 1980, where mortgage rates were like 15%. But yeah, I mean, refinance demand is what though? Doesn't create anything. Yeah, it lowers the interest payment a little bit, maybe. That's where the major action is going to be if they can lower the rates appreciably. Now they're helping all the people, all the refinance that's going on is people going from toxic adjustable rate mortgages, which we know how toxic they are, because they probably got in it 5 years ago. And because there is a time bomb in those, right? And they give you the low rates for 5 years, and then next morning you wake up, your mortgage doubled. And that's what happened in 2008. I'm telling you, I had a mortgage company from 2002 to 2006. I mean, the shit mortgages I was writing was like, whoa. I go like, this is going to go so bad. And it did. And I actually made some money. I mean, shorting all these Countrywides and Century Finance and all that garbage that I used to send my loans to. Yeah, they're not. Well, I mean, look, bank stocks have done really, really well, though, right? But I mean, because I have my 150, 80 stocks, and I check my 52-week high list every day. Half of them are bank stocks. In fact, I can go check it now. I'll bet you they're 50% of it. Yeah, I mean, Gen Z. Okay, cool. So let's look at, that's TLT. So TLT has actually done not much. Let's look at it. All right, so let's go look at my 52-week high list, although market's closed today, of course. Let's see how many bank stocks are in there. Shit ton, I bet. Oh, market's closed today, so it's not going to give me that. But if you created a 52-week high list, there's like half the stocks in 200 names is bank stocks. I mean, we can look at some charts and figure that out real quick, right? So, why do bank stocks do well? I mean, banks make money on making loans, right? They don't do anything else. Obviously, trading helps companies like Goldman 52-week high, JP Morgan. They have trading arms, going the other way. But if you look at like more purely bank stocks, especially regionals and things like that, here's B of A. Actually, they're all kind of rolling over. I don't know, Wells Fargo. The only one is Goldman that's going up. Wells Fargo, no good. SoFi, no SoFi. Yeah. On a pure bank. But then a lot of bank stocks have been making 52-week highs until last week. And then it kind of looks like they're correcting a little bit. But look at the difference, right? And then what is the Capital One? We know what happened to credit card companies. Although they bounced, it was temporary with the 10% cap on interest. How's that going to help? I'm not sure. What's MasterCard MA? Yeah, sell off a little bit. What is that? Is it XLE? No. I don't know what the finance ETF is where all the bank stocks are in there. I think I'm catching a cold. But, yeah, I mean, banks do well when interest rates go down because their margins go higher. Like Mosquito correctly said, They don't like a flat curve. But yeah. The traders just making money are the ones selling BS. Yeah. Show me a day trader that's lasted 30 years, 20 years, 10 years. There are some that are successful. But there is this huge thing now, funded accounts and people go pay $300 over and over and again for trial to pass trials so they can make some money with other people's money. And how many of those are successful? But you got day trade, but you better know what you're doing. It's very difficult to day trade. So here's the numbers with that. On a daily basis, markets green 54% of the time. On a yearly basis, markets green 67% of the time. On a decade basis, markets green 85% of the time. What does that say? So at 54%, it's like a coin flip, basically. Take the commissions out, take the slippage out between bid and ask, you're at 50-50. You think you can make money at 50-50? I don't know, unless you have some really, really tight laser managed, account, risk managed account, maybe. That's why those day traders draw all these lines on chopsticks on all over the charts. There are like 50 lines going all over the place. And I'm like, wow, how dumb shit is that? How dumb is that? Private gun is going to charge a mortgage without much leverage. Private credit is not doing that well. I don't know where you get your information, but private credit may be the next actually swan, black swan. I'd be really careful with private credit. There's a lot of stress going on in private credit. A lot. I have a lot of friends still in the business who survived. It's a tough business to be in, man. As long as you're not warehousing your own loans, you're fine. You just sell it. It's okay. I think Trump wants acceleration of financing. You're not going to get lower rates, mortgage rates. Depends on the 10-year, 20-year, unless the 10-year, 20-year appreciably come down, because that's why the government issuance of bonds have been all short-term, 1 year, 2 year. There's no buyers for that. The buyers are going to demand higher returns with 38 to be 39 trillion national debt. Again, go look at the JGB rates. Look what's happening in Japan. So we're at 130% of debt to GDP. Japan is 230%. China is getting close to 300%. So yeah, they of course they can. They can print more money. Those are small numbers, man. I don't know. I don't think they make that much of a difference. Powell steepener is good for the banks, man. Is anything good for the middle class? You have some good news, my man? Share it with us, Mosquito. Share it with us, please. Middle class, the only good thing is invest long term. Accumulate hard assets. Don't slave harder. Save in hard assets. I want you to take the L and unload as many BMNU shares as I can. Why by June? I'm not sure. I can 9 to 11. Okay, again, that's your heart talking. How do you know it's going to be 9 to 11? The only way BMNU is going to be 9 to 11. I mean, you said that, I think last time you were here, and you said last time BMNR was at 40, BMNU got to 12. This time BMNR is at 30, BMNU is at 5. In order for BMNU to get to 9 to 11 with the volatility drag and the slippage, I call it, BMNR has to be 50. Well, let's do the numbers. Let's say BMNU close at 590 or something. Let's say BMNR is at 30, it doubles, right? Theoretically, BMNU should go up 200%. So BMNR goes to 60. BMNU will hardly make it to 12. It won't, actually, because of the slippage in the volatility drag next 6 months. It'll probably be 10. And on the next pullback on BMNR, right? Look at MSTU. MSTU and MSTR have been around for a while. If it doesn't hit those prices, I will unload lower by then. Okay, cool. Hopefully you're selling some calls. That's the only thing you can do, right? I mean, even if you're short puts, you can sell some calls. Because you can't get into trouble with the calls. Selling calls, bringing some more money. XLF, yeah, correct. Yeah, let's take a look at XLF. I don't deal with too many ETFs. There you go. Nice and steady. Nice and steady. But we'll see. We'll see where all this takes us. So let's go to something interesting today. Do any of you want to show up, actually? Do you? Let's do that. Let's post link for the live stream. So I'm going to be reading some posts from X now. Let's see. Here's the link. If you want to show up, grab the link. Make sure you're in a quiet place with a good internet reception. We can talk about anything you guys want to talk about. Here's the link for the StreamYard. All right, so market's going to open sharply lower tomorrow. We know that. Bitcoin sold off. We know that. Ethereum sold off. Let's see where Bitcoin and Ethereum are. Those are the only open markets. Bitcoin 93,000 down 2.5%. From a high of 97,000 range. So it sold off about 4,000. Ethereum 32.21 down 4%. Got up to about 30. I mean, it's not that bad, actually. I mean, it's bad if you own it, but it gives me a chance to buy Bitcoin cheaper. So that's where crypto is at. Let's go to X. Let's see what kind of furus we have today. What kind of dumb shits are going to fucking say some dumb shit that's going to irritate me. Seriously, there's so many dumb shits on X. It's not even funny, man. Just not funny. All right, so let's start with a comment. I'll start from the top. Why Trump won't let Greenland become China's next colony? Greenland or bust. How Trump blocked China's Arctic play. Trump just shook NATO with tariffs tied to one word, Greenland. Okay, let's see what this is. I'm really curious about this. The media says he's unhinged. I'm not going to read the poster's name as I don't want to get in trouble. They're wrong. This video breaks down why Greenland is a frontline asset in the next great power conflict, why China wants it, why Denmark can't defend it alone, and why Trump's move is not madness but strategy. Okay, I'm sure there's opposing views to this on X as well. This isn't bad by bullying allies or taking land. This isn't about bullying allies or taking land. It's about geography, security, and preventing Chinese expansion in the Arctic. Greenland is not optional, and power in the 21st century doesn't wait for permission. Okay, cool. Might makes right, I guess. Okay, let's read more comments. X feeds me all this garbage, so I'm just trying to find it. Seeing a lot of people worried about market opening red on Tuesday because of the EU trade news. As for me, the strategy remains the same. High yield dividends, don't ask the market how it's feeling before they pay out. Cash flow keeps showing up whether prices are green or red. What's the drawdowns? That's why drawdowns bother me less. I'm focused on income first. Everything else is just noise. Okay, I kind of agree with that, actually. What's my? Oh, I'm not going to mention his name. He's an ASST guy. So he says, I had no desire to be rich so I could buy a Rolex or Lamborghini. I wanted to be rich so I could control my time and go for a long run at 10 a.m. on a Tuesday or take the afternoon off to hang out with my daughter. Focus on what matters, not materialistic bullshit. Well, for a guy that says that, he certainly flaunts his bullshit out there. He's a well-known Xer. Let's see how many followers this moron has. 332,000 followers. Interesting. Interesting. Here we go. Here's an idiot. Option selling with whatever. Wow, full-blown panic in capital letters ensuing on X this morning over NASDAQ futures being down 1.5%. I don't see any fucking panic anywhere, man. Here's one I agree, and Buddha, you should listen to this. To all of the younger people here, a good credit score is very important. Try not to mess it up before you even realize how important it is. I 100% agree with that comment. And here's another moron. I'm not going to mention names. The stock market will be green tomorrow. Okay, sounds good. Could be. Who knows? So there's a guy talking about markets being open 24/7. Markets should not be open 24/7. You know, for your information, sir, markets are open 24/7 to a point. This is not innovation. This is providing needed access. This is not financial market democratization. This is breeding a generation of dopamine junkies addicted to checking price ticks 24 hours a day. What do you think they're doing now? You think they're doing anything different now? Yeah. Here's, well, him I can mention. Ray Dalio, we all know, right? Okay. He says it's now happening. The existing flat monetary order, the domestic political order, and the international geopolitical order are all breaking down. Mr. Gloom and Doom. These old-timers where they made their billions, and I don't know if they would survive today. So we are at the brink of wars. It's all happening because of the big cycle that's driven by 5 big forces I've described repeatedly and laid out in detail in my book, pitching the book, titled Principles of Dealing with Changing World Order. Do you understand the big cycle, and do you know how to deal with it? I'd like to help you. I will continue to share with you my understanding of how the mechanics work and how I see things transpiring. If you want me to send you my postings, you can sign up below. Sure, Ray. I wouldn't mind. Yeah. Okay, there's more. Stock market future continues to sell off. Okay, cool. What else? Let's read a couple more. There's one that says Hood UI is designed to induce panic. See, all these people who blame other shit now cause people to panic sell. Seeing 2 to 2.45% is nowhere near as much as a shock factor. I'm seeing red. Okay. This is on Bitcoin. No phone calls at the moment. Here's an interesting stat. This is absolutely insane, says this poster. U.S. housing market sellers outnumber buyers by 529,770. I agree with that because affordability is in the toilet because mortgages are not down. I mean, think about it. If you're a 30-year-old couple, college graduate, you both have decent jobs, you cannot afford a house, starter house in California. You just cannot. Okay? Affordability is in the shit, in the tank. Oh, here's a major influencer. Yeah, you all should know him. Starts with a first name A. Germany morning price action. This guy's some fucking number. Germany morning price actions for U.S. equities. If this continues, overnight markets may show these prices line up to the current close. Okay, so let's see these stocks. Tesla down 1.83%. Hood down 5%. What happened to all the Hood put sellers? Palantir down 2.3%, NVIDIA down 3%, AMD down 2.6%, Rocket Lab down 4%, Coin, MSTR down 5%, NBIS, all these fucking high flyers with the dollars. Unbelievable. Okay. SoFi down 6%. Holy shit. Oh, okay, cool. Hood. No. Okay. All the put sellers on Hood now. I go like, oh, I love Hood at 120. I'm like, okay. And then they booked the put premium that they took in like $3. Quick cash grab for a month or a week or whatever. Now stock is 105. You know, they go like, oh, look, I made all this premium. I'm like, you have a fucking $15 unrealized loss. What are we talking about here? It's hilarious, these people. There was one guy that posts his win rate, 88% win rate. I'm like, yeah, but you all the underlying you own. He goes, cover calls are great. All the win rate. In order for your calls to expire worthless, two things have to happen. Stock is either going to go sideways or it's going to go down. So if it goes down and your calls expire worthless, yes, you can book that as a gain. But what about the underlying going lower and creating massive unrealized losses for you? You don't pay attention to that? I don't know. Maybe I'm the dumb one in the room. You know what I'm saying? I would love for these guys to grab the link and come on. We can have like a little debate going on. Yeah. Here's Chamath Palihapitiya. The fight over billionaire tax has uncovered the following truths. A small group of people are trying to normalize being an unaccomplished grifter who can't make hard decisions. Talk about fucking calling the pot kettle black. I mean, this guy is the whatever. Wow, this is interesting. A small group of people are trying to normalize being an unaccomplished grifter who can't make hard decisions and would rather take from winners. How'd you take it? How'd you take those winners, Chamath? Yeah, by SPACs. How many of your SPACs have gone to zero? Even if it's illegal or unconstitutional, in doing so, it would torch the fourth largest economy in the world. This is what little care. Well, you should move out of Chamath. You should move out of California. Follow Elon and many other billionaires going to Florida and Texas. I don't think, Chamath, I don't think you're in touch with the middle class in California here. I don't think they have that billionaire tax problem. Although I do agree billionaires pay more tax than anybody else. So do you want to tell your kids that being a loser is okay? Wow. Don't try. Just take them from others. Okay? Or do you want to tell them that you get out of a system that you put in and adults need to step up and make hard decisions? Let's vote on the tax. I don't think that's going to pass in California. I live in California. I don't think billionaire tax is going to pass. Although California is run horribly, I must agree with Chamath on that one. You know, I agree with that one. Here's one. Here's a fool. For the next 30 days, let's see how many subscribers or followers this guy has. 45,000 followers. Imagine 10% follow this guy and do what he does. For the next 30 days, I'm dropping a fresh stock deep dive every single day. All these analysts show out of the blue, and I'm putting in serious work for you all. Each post is designed to give you enough context and insight to start building your own thesis on a stock and decide whether it deserves a spot in your watch list or your portfolio. This is not financial advice. Good for you. It's not my opinion based on publicly available information. Now he's saying he has other information. And you should always do your own research and make your own decisions. Subscribers get this research first before anyone else. Lock in, turn on notification, and enjoy the series. Interesting. Yeah. See, this is what I get served up on X, and I chuckle. I laugh. And here I'm doing, honestly, God's work. Calling it the way it is, putting out my losers and gainers and whatever. I go like, I guess I should have a subscription service now. You know what I mean? Anyway, yeah. So next is Greenland. We gave up on Canada. All the people in Canada, poor people. It could have been part of the U.S. It's getting out of control. Well, one thing is for sure, right? One thing is for sure. With this administration, anything is possible. Anything is possible. Anytime. That's why, as a day trader, you're going to get whipsawed like you are. CNBC. Fed Chief Powell to attend Supreme Court arguments on Trump bid to fire Lisa Cook, which is a Fed governor. I don't know what's going on there, but he certainly doesn't like Powell. And I don't think Powell likes Trump either. Well, he'll be gone. He'll be gone. He'll be gone in May. Right? Right. Okay. And where are the futures now? Down, yeah, down 0.91% and down 1.1%. No big deal. No big deal. Okay. Yeah, silver. I'm long ZSL. I'm going to do more covered strangles on it tomorrow. Silver above 100 is a 5 trillion market cap. The Hunt brothers. You remember? Yeah, they tried to corner the silver market. Somebody's trying to do that. I think the Chinese are cornering the silver market. Trump will come out and say, "Be free, silver." But anyway, yeah, silver I think is like 93, 94. The Hunt brothers tried to corner the market multi-decades ago at 50, 60. I think it was 50. Yeah. And let's take a look at silver actually, where it's been parabolic. It's gone nuts. Completely bonkers. Let's take a look at silver and gold. Silver. This is a silver ETF. This is just 1 year. Man, it's gone parabolic. Let's take a look at 3 years. Whoa, look at that thing. It's a quadruple since 2023. Yeah, accumulated hard asset, folks. This is what happens when you keep printing and spending. Money goes into the circulation and it goes into hard assets. That's 10-year. Let's look at 10-year. Whoa. From 10. Yeah. And all time, let's see when that spike was. Yeah, right there. 50. That was in 2010 when Hunt brothers tried to corner the market. But I don't think it's the same market. But this parabolic move is going to end badly for a lot of people. Yeah, it's ridiculous. Look at that thing. Straight up. Gold over the last 10 years. See? Same thing. Not as parabolic as silver, but the ascent is incredible. And all the gold stocks and silver stocks are following through. But at some point, I will step up and start shorting silver. I don't know where. Maybe 100 psychological number. Because the downside is going to be pretty interesting on this. Very interesting. David says, good time to buy. All will be up next week. Okay. How do you know that? You have some info? Send me the info you have. No. Was it in 1980? I don't know. My chart doesn't go back that way, but last time it hit 50 was 2010. Possibly. I think it hit 50 then too. So, well, now we're double that 100. But that's because we just print and spend. Just keep printing, putting into the money has to chase something, and then it chases these things. And so anyway, nobody wants to come on. I think I did enough yakking. I like these Ask Me Anything sessions. So if you guys have any other questions, post it up. If not, I'll be back on Wednesday, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern, and on Friday, Power Hour with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. I'm not sure if my put debit spreads are going to save my ass tomorrow on SPY, but then it'll be better than nothing. Yeah, I'm long too much. I think like I'll probably trim, take some L's tomorrow, and we'll see. We'll see where we are. The year just started. Exciting already, huh? Greenland. We own Greenland. What's in Greenland, by the way? I haven't studied this at all, so I'm total dumb shit when it comes to this. They have oil? No? Is it really that strategic thing that China's trying to do? China has taken over all of Africa. Why don't we just go clean up that a little bit? They have bought every important minerals and mines and covered that up in Africa, from lithium to all these other, minerals and stuff that we need for battery production and whatever not. I don't know. But one thing is for sure. With the Trump administration, not a not a dull day, not a dull week. Again, they have to do what they have to do, and markets react. So my call for tomorrow is market opens sharply lower, tries to bounce, and then rolls over at the end of the day. Let's see if I'm correct for all the day traders. Okay. But actually, you know what? I was just going to look at some charts real quick just to give some perspective. So a lot of people are involved in SoFi, Hood, Palantir, NVIDIA, Mag 10. Yeah, Hood's getting to, Hood opens 5% lower. We'll be right at the 200 EMA. I may even take a crack at Hood about 101, 102. Yeah, that's good support right there, and it holds. Last time it did. What happened to the time that it didn't hold, though? I mean, it's a nasty downtrend at the moment. Let's see, Hood. Yeah, it holds 200 EMA really consistently. Last time in April, it went, let's see, 36 to 20, so but it went about 15% below the 200 EMA. A lot of people were saying like, oh, Sergio will get this head and shoulder top. I'm like, yeah, it's chopsticks, bro. I don't know. But I mean, there is a valid point there, though. It looks like a nasty head and shoulder top. Neckline at 98. If we take out that neckline, shit, we can go down to 40 on Hood. Technically, again, chopsticks talk. My chopsticks are as good as anybody else's. A lot of people are Palantir. Palantir has been the same price the last 6 months. Now, let's see. Yeah, since last August. Palantir exactly the same price as last August. 6 months. Same thing with NVIDIA. Yep, NVIDIA has been the same price as it is last July, August. Yeah. Is this a big top or just a base that we're building to just rocket from? I don't know. We'll find out. This is again for trading. None of this is trading, financial investment advice. Don't do what I do. What I do is super risky. Let's see. What else? SoFi. Same thing in SoFi, 6 months sideways. With a pretty broad range, obviously. About 30% range, 33 to 23. Yeah. SoFi at 200 EMA is good support too. It's funny, right? Market's 1% all-time high. All these stocks are down, down 30% from all-time highs, and some of them are a lot more. But then all the crazy names just kept skyrocketing last week. STS, Rocket Lab. I wouldn't dare short these things, but they're not worth the paper they're printed on, most of them anyway. I'll just follow my 52-week high policy. I don't want to deal with any of these things. But what's in my 52-week high list? There are 155 stocks. In order for you to get those, though, you have to be a member. Not really. I put it on. Actually, there's a video coming out at noon today. with my watch list, unlike that guy on X. I think I'm going to buy AA. Give us a little bit more pullback, maybe under 60, maybe about 55, 56. I'm at 58, and next support is at 50. So, yeah, we'll see. We'll see where this week brings. Should be a good week. Good week of trading. Don't be panicking. Doesn't mean you get out, but don't be panicking either. Do we still keep commodities for the time being? Yeah, I mean, trend is your friend, no man. I mean, they're nosebleed. They'll pull back. They'll give you a shakeout. You know, every parabolic ends in tears, so take advantage of it when they do pull back, though. Because tops are not created like this usually. Usually they retest, they work on it, a little distribution, whatever. But trend is your friend. Trend has been your friend for 3, 4, 5 years in gold, silver. Pullbacks are bought. Why? I wouldn't. Yeah, they're all been uptrends. All of them are in uptrends. Like we say, trend is your friend. It's gone out of hand, but still, trend is massively up. Short term, intermediate term, long term. Unlike some other things, like oil, crude oil, no. Copper, definitely. Definitely. That's why copper stocks have done so well this year. See where one of the biggest ones is. Oopsie. This is Freeport McMoran, one of the biggest copper mines or manufacturers. Yeah, look at that. 40 to 60. ERO is another one. Yeah. That's the one I want to deal with. There's the Copper Miners ETF, COPP. Look at that chart. Trend is your friend. That's it. We don't want to question it. Yeah. There's another Copper Miners ETF. 18 to 47, folks. Not too bad. While people go deal with other shit. I'm like, why do I have to deal with it? We should just find an uptrend, deal with it. Yeah, we're going to make some money on the SPY PDS, but we're going to lose our ass on ZSL. Nah, I don't worry about that. I'll sell a little more covered strangle on that. CCL is going to be a headache, I'm pretty sure. BMNU. I'm covered calls. I'm covered with 6, 7, 8. Not that bad. I took in shit ton of premium. I think my call space is going to be like 5 or a little below, so it's okay. CCL and Open are going to be trouble, I'm pretty sure. ZSL, we're going to have a red day tomorrow, I'm pretty sure. Yeah. So I didn't get assigned. ZSL to 2x inverse ETF of SLV closed at 304. So I was at a 3-4 covered strangle. No, I'll do a 3-3 covered strangle. Let's see. Assuming silver opens up 6%, this will open down 12%. 12% is 36 cents. This will be 270 range. Let's take a look at the puts. I highly recommend, by the way, for you guys to have an option chain calculator or some sort. So this is monthlies. They don't have weeklies. February. Feb 3 is closed at 50 cents. They'll probably open about 80 cents. So I'll sell the 3 puts. Wow. The 3 calls are going to be probably 40 cents, 45 cents. I can get like $1.20 for 3-3 strangle. Because my call space is like 3.15. Am I doing that right? If I chuck the 3 puts at 75 cents and these will be 40, 45 cents, that's $1.20, folks, on a $3 number for a month. Okay, if I get assigned, I'll get assigned more at 175, and if I get called away, I'll get called away at 425? That can't be. I can do the 3/4 strangle probably for $1 or more tomorrow. Then it'll be 525 sale in case silver correct. Oh my God. 3/3 or 3/4. That's the strangle. We do it. I'll put some orders in later. How is that possible? On a $3 number, you have this kind of premium. Yeah, it was IV is 155. Okay, cool. No problem. We'll fix that. BMNU, I don't know. Deadly. Probably open down 10%. 550 range. It's all good. Short the 6s, 7s, and 8s. Again, the expired watchlist 2 cycles in a row. So it's the 3rd cycle. Okay, no problem. Yeah, CCL is going to be a problem. Open may be a problem. PEPG. Yeah, I'll put some orders in for tomorrow. Okay. Let's see where SPY can open. SPY closes at 691.66. 1% will be 0.9% will be 685 range. Yeah, I'm long to 690, short to 680s. I bought them at 260. Max gain is 10 points, $10. Maybe hold them. Hold them, hold them, hold the hedge. Yeah, no big deal. Not panicking here. We'll figure it out. We shall figure it out. All right, folks. I'm going to go take off, eat some lunch, take my son to soccer practice, although it's Martin Luther King Day. Their coach wants him to be at practice. Okay. All right. See you guys on Wednesday. Please go subscribe to the free newsletter on my website, www.sergioavadian.com. You'll learn a lot. If you want to become a member, click join. You can get all this for everything I know for a Big Mac a month. Send me an email, sergio@sergioavadian.com. I'll send you the Telegram chat group link because they get my trades live. None of this trading financial investment advice. What I do is risky. Do your own due diligence. But if you want access to my live trades, you don't have to follow any of that. You get it through the Telegram chat group. You get a Telegram chat group or members only live stream every Wednesday or Thursday, which is one-on-one interaction, which is good. And you get weekly account equity screenshots and as well as daily open positions at the end of the day. So I cannot be more transparent than that. David, you're welcome, David. I will see you on Wednesday, guys. Take care. Be well. May all your longs skyrocket and may all your shorts tank.